welcome back to Crypto Avenue. Nice that you tuned in. This is my first video with some content. So what will I speak about is about technical analysis. Basically just the introduction, just to give you just a little bit information how it works or what it is. If you never heard about it. If you heard about it, maybe it will help you just to freshen it a little bit up. But if you're a professional, then probably this video is not for you. Maybe the next videos that will come on this topic. So yeah, let's jump into it. So what will I speak about? First of all, will give you like in short overview how this started. So basically the inception of the DAO theory, how you call it, and then we will jump into the main topics like what this idea behind that was, and then we will jump over to the trends. So we will talk about 3 different kind of trends, how they look and how you can find them on the chart. Yeah, so let's jump to the first topic. So the inception of the DAO theory, Charles Dow, and Edward Jones founded the Dow Jones Company in 1882. So it's round about 140 years ago, right? Yes. So, and this guy, Charles Downs, he published it in the Wall Street Journal, which is the famous newspaper in the United States, or let's say the most bought newspaper in the United States, if I am not wrong. And yeah, he wrote basically down his theories. So he started to, basically started with the chart analysis and technical analysis. So he had some thoughts, ideas, which he published there. He never wrote a book or something, which is quite sad, but based on these published theories that he had, all the modern technical analysis is based on basically on that, what he wrote, and everybody is agreeing with that. So yeah, in 1884, these 2 guys, they published the first equity index in history. So when we speak about indexes, you probably heard about it. It's, for example, in the US S&P 500 or the Dow Jones. There's still a Dow Jones index, and there are other indexes as well for energy, for health, for biotechnology, for small caps, mid caps, whatever, indexes on bonds. There are so many indexes outside. I mean, wow, this is amazing. And this started with his first index that they launched in 1884. And they had a second one, which they then launched 2 years later or whatever. These were the founders of TA and indexing. So this is just a short historical background information that I want to give you. So yeah, let's jump into the main point. So Dow's assumption was that when you see the price trends, or when you see the price of an asset, whatever it is, like equity, FX, bonds, or whatever, all these transactions within the market or within this particular asset are containing all relevant information. What's that mean? I mean, this is like basically all the information that you can get outside as an investor or whatever, all these market participants, and all the knowledge that they have, all the knowledge which is outside regarding whatever a company or basically a company on a bond price or on a stock price is already reflected and priced into this particular asset. So I wrote it down here, you can read it. That means that all relevant information, news, outlooks, etc. are already priced in and reflected in the actual price of bond, currency, pair, equity, index, commodity, so on and so forth. So, unexpected event like earthquakes or similar tragic events, of course you cannot anticipate them, but the market is reacting very, very fast to tragic events like that. So what I want to say is, or is that everything's priced in. And as everything's priced in into this asset what you're looking at, you could basically, you don't need basically get new information or whatever. You can see on the trend if there's a high demand on this equity or not. Let's say, I don't know, a couple of years ago, Tesla, for example. Even if you don't read anything about this company, just by looking at the price action, you know that that's a hot stock, something is going on. This is like the idea behind that, so that you have to know, okay, based on the price action, I can see if one stock, bond, whatever, the company behind it is healthy or not. Yeah. What is the estimation of the market participant on this particular asset which you're looking at? Okay. So let's jump to the next slide. The trends. So what is a trend? What you will see when you look on whatever asset you're looking at, tradable asset, let's say, you see never like a linear price movement, price action. You see spikes up, spikes down, like in every asset. These look like waves, and they're never ever linear. So what you have to know just is that the direction of these peaks that you see up and down, direction of the peaks shows you the trend. This is basically the foundation of a trend. It's really not that hard. And you can see, and we will have a look now on the next slide, how it basically looks. So let's jump to the next slide. Before I jump to the next slide, I just give you a short overview. There are three trends. It's an uptrend, there are downtrends, and sideways trends. How are they characterized? So you see, uptrends have higher highs and higher lows. So every spike that you see, like next time to the upside, is higher than the spike before. And you see the same with the spike. I mean, it's not a spike to the up, but a spike to the low, let's say, or valley. I don't know how to say it in English. Is higher than the one before. This is the characteristic of an uptrend. The downtrend is vice versa. So you have lower highs and also lower lows. It's easy like that. And sideways trends, basically there's no clear direction. You don't see like climbing up like stairs or climbing down the stairs. It's like, it's a choppy market. It's like going up, down, down. There's no clear direction, and this is basically the hardest environment for a trader. But we will speak about that in later videos. It doesn't make sense now. Now we jump to the uptrends. So I did here something for you. So look at the blue bold line. Yeah, this one here. So you see the price of, you see here, it is Bitcoin to US dollar. You see the price of Bitcoin going up. You see the first spike to the upside. So this is our first high. The price is going down. This is our low. So the next time we see a spike or like the price trending to downside, then we have a new high. And as you see, this is a higher high than the high before. So the price then consolidates again to this area and turns around. So what you then see is this is a higher low compared to this low here. This is what I meant. Higher highs, lower lows. And so then the price is continuing to the upside and breaking the former high to another high somewhere, which is not visible here in this chart. Obviously, as we spoke already, the price movement is never clear like that. What you basically will see, and this is even not accurate, these little blue lines that I drew here, they show you that actually the price is not linear, but you see always these spikes in every direction. So what else should you know? I wrote two thin red lines here inside, and the first line is the so-called resistant line. What is a resistant line? So you see the first high that we have here, and the price went down. So the previous high of the BTC price here, yeah, was a resistance line. So basically when the price goes up and you cross this line, the resistance line, the former resistance line, then we broke the resistance line. So the resistance before was on $5,000. We broke them, so it is most likely that the price will go up. It is not all time that easy. You will see this when you experience that by your own, and I will show you later maybe on other videos. But now, as soon as this high on 5 is broken, so the red line here, we are heading up to a new high. So the price comes down, and the former resistance line here, which was a resistance for 5,000, and we broke the 5,000 already, becomes most likely the new support line. You see, this is the area of the support line. So how accurate is that? It is not 100% accurate, but what you will experience very often when you look on charts and the price movement in the past or whatever, you will see that the price tends to come back to the former highs. And as the price is jumping back here, yeah, this is then our support line. This is, I don't know, it's not 100% accurate, but it happens so often that this area, and it is not like it has to be 5,000 exactly. No, not. It can be less or more, or it can be perfect timed on these 5,000, which is not that likely, but it is in this area, yeah. And then, yeah, the price tends to take the same direction as before. Okay, the same thing happens here again. We had this higher high, which is now our new resistance line, and then the price, yeah, crosses these resistance and becomes a new support line. Okay, this is something that you just should keep in your head, that prior resistance most likely becomes support. This is often the case, but not every time, and it's also not that precise that you see it here. It's not 6,000, could be 5,990, could be 6,002 in this area, but you get the idea behind that. So let's jump to the next trend. Yeah, it's a downtrend. It's like vice versa. It's the same. You have a high here. The price is going down. We have a new low after the price goes to the other direction, and the high that we have now here, the peak here, is lower as the high here. So the price goes down. We have a new low. So you see, we have from that high to that high. This is a lower high, and the low that we had before now, this low is lower than this one, and this continues. This is the characteristic of a downtrend. I mean, this is obviously not, and this is like the perfect trend, let's say that. And in the market, it looks different, but yeah, this is just to show you how it works. And you have these small lines again, just to give an idea how the trend or the price movement should look or would look in reality. And the same with the resistance and support line applies to the downtrend as well. So we had the first low here, which is now our support line. So this, if the price would bounce back from here, then that was our support. It supported at $6,000 and went back up. In that case, it didn't. It broke through the support line, and the former support line becomes now the resistance line. Yeah, it's vice versa. So now the $6,000 here, the support line before, becomes resistant. The resistance line, sorry. And the price action or the trend, the downtrend is, keeps going on. And the price goes down to $5,000. So what you have to just keep in mind is lower highs, lower lows basically is a downtrend, and the prior support most likely becomes resistant. Yeah, and as we had it here, prior resistant becomes most likely support. This is never ever the case to 100%. Why I'm repeating it so often is because it's that important. You can't just rely on that lines that you drew into the charts. Never. There's always room to, I don't know how to explain. You have to know that it could be less or more all the time. So don't try to be that precise and okay, it has to turn at 6,000 or here at 5,000. No, as you see, I drew this exactly a little bit over the 5,000 just to show you that it doesn't have to be 5,000 on point. No, that's not the case. You can use some filters for you. Let's say you say, okay, good, it can be and broke and nobody or just a few people from these, hey, I'm a day trader, new guy, survived. And the one with experience, they are still in the market. And they know how to handle this. And it's really the hardest part of it, because the risk to reward ratios that you get outside of these markets are terrible. You have to basically use different strategies, but we can speak and will speak about this in different videos and other videos in the future. Yeah. So this was basically the first video in my introduction to TA, technical analysis and trends. I hope you liked my video. If you liked it, please give me a thumbs up. Subscribe to my channel and hit the notification bell. I heard it's very important for YouTube statistics to rank me high. You would do me a favor with that. Stay tuned to my videos and stay healthy, stay happy, happy trading. See you next time. Bye.